Welcome to the Business of Hotels podcast, examining the issues mattering most to owners and investors. And now, your hosts, Gary and Glenn.
Hey everybody, welcome back to the Business of Hotels podcast with
Gary Isenberg.
and me, Glenn Haussman. Gary, it is so great to see you. I don't know how we're still alive. We just finished the America's Lodging Investment Summit, aka ALIS, here in Los Angeles.
Yeah, it was phenomenal a couple of days. A little grueling, as they always are.
Yep. I got to tell you, man, I'm getting a little old for these things. I remember back in the day, way back in the day, when it was at the Century Plaza. Do you remember those days?
That's before you must be a little older than me.
Yeah, I must be. Well, no matter what, I look older than you, especially after an event such as this one, right?
Correct. It's been a crazy day.
Yeah, but I remember when I was younger, I'd be able to do these things, no problem whatsoever. But I want to talk about some of the basics of the ALIS conference before we get into the specifics of what happened, because I know that we have a lot of listeners out there that are up-and-comers in the business that might not have attended an event such as this.
Correct. And I think, it's a great time to socialize and mingle and network with people. Not only the content is so important, but also just the networking and going to events and hearing from a grassroots perspective what's going on in the industry.
Yeah, for sure. And I'll tell you something, Gary. It's really amazing because it's one of those events. If you want to be in the mix, you got to keep at it. You got to go year after year after year. And then suddenly, hey, 20 years later, everybody seems to know who you are.
Exactly. It's nice where you're not chasing people and people are chasing you for a change.
Yeah.
It's also what's great about this event is that it is in the beginning of the year. And it kind of lays out the groundwork for the rest of the year, predictions of what the year is going to be, and all these different things that we talk about. Yep. Where some of the other ones kind of get lost within the thick of the year, if you would, all the processes that we're going through.
Yeah, for sure. And I love the timing of this because it really sets the tone for what we're going to be experiencing or should be experiencing in 2019. Now, again,
you know what the best part is?
Oh, tell me.
Is the fact that we're here in LA and not in New York right now.
It really is. As we're recording this, it's the polar vortex is going on, and I was surprised by how many people yesterday said they were going to leave a little bit early because they're afraid that the airports were just going to close.
Yeah, actually, Chicago, I think today or yesterday, is colder than Antarctica.
Yes, I did read that, and Siberia. It's not good to be colder than Siberia.
Crazy.
So you guys are listening to this a few days after we're recording this show, and ALIS, as we said, is the first major financial conference of the year. Then there's the Hunter Investment Conference, the NYU show, which is in June, and the Lodging Conference, which flip-flops between September and October, depending on when those Jewish holidays are. And I think those are great meetings, not always to assess what's going on, but to network and reconnect. And I think it really powers everybody through. It's almost like a seasonal checkup in our business.
Correct. Make some contacts.
Yeah.
It's a great way, especially if you're developing business and developing relationships. You can contact people all in one session, one place, multiple meetings. We literally do the grind.
Right.
We start at 8 o'clock in the morning till 5, 6 o'clock at night, 30-minute intervals, meeting people and talking and trying to business develop.
Yeah, for sure. This year, I was shooting videos for the No Vacancy site, and we set up interviews every half hour, and I kind of sort of forgot to put in a lunch break on that first day, but we were going from first thing in the morning till it ends, and then you go to the cocktail party circuit, which is exciting, exhausting, but where a lot of business takes place, right?
It does. The cocktail parties, you see a lot of. It's interesting. I was talking to someone last night who I would consider somewhat a newbie to the conferences, and this is the person's second or third conference. And she made a comment to me last night. She goes, "I actually feel comfortable at this event. I actually have people I can go around and talk to and say hello." Whereas the first couple of years, when you're young and you come into these things, you don't know anybody. So I guess where I'm getting with this is don't let that intimidate you when you come to these conferences. Keep at it, because just within a short period of time, you'll feel comfortable and be able to mingle around and so forth.
I'm loving where this conversation is headed, because we never really talk about the tools to help people be really productive. And we're going to get into some of the things that people were talking about and the major issues. But it's interesting how each one of us kind of figures out our own routine as the years go by in order to find success and make it from that 8 a.m. to midnight 1 or 2 a.m., depending on how aggressive you want to be.
Correct. And I think for young professionals going in here to business develop and network, you really need to have a plan. Be organized, have a plan, know who you want to meet, try to schedule time ahead of time. And don't be afraid to walk up to people in the corridor or hand out cards. Just introduce yourself. I mean, that's what it's all about.
So what was your strategy then when you weren't as a well-known commodity as you were today in order to break down those barriers? Because I know I struggled, and I think a lot of it was an internal struggle, an intimidation I felt, because I saw these older people that were well-established, and I psyched myself out and probably didn't take advantage as much as I could.
You know, for me, first of all, I didn't start doing this young.
Right. So you already had a level of confidence in you.
Yes and no, but not in this environment.
Right.
You know, becoming a professional service, selling professional services and running a professional service organization, I only started 8 years ago. So for me, that was a new process, going out and networking and, you know, eating what I killed, so to speak.
Right.
So that was a growing experience. But for me, the first thing, my first year, I basically camped outside of Illy.
That's the coffee shop in
Correct.
the lobby of the JW Marriott where the event took place.
Did not buy a badge, was not attending ALIS, but I got into the lobby prior to the security getting in there in the morning. So I got into the lobby at 5 a.m.
Oh, my God.
Yes, this is what I did.
Right.
Got in the lobby at 5 a.m., staked out a table at Illy, because they had tables in front of Illy at the time, and sat there all day long and had meetings back to back. About 5 o'clock on the first day, I got chased out because I didn't have a badge.
Wow, not bad. You got
Not bad.
You got a lot of hours there, a full 12 hours.
Correct.
That's pretty amazing. Now it's impossible to get in.
Now they take your picture, they do a retina scan. You couldn't walk into the lobby of the JW without your badge being scanned, which has a picture of you, and the security guard checks your picture.
Right. I'm glad that the government shutdown is over, but if it wasn't, those security guards could probably have taken over for the TSA.
Very good. But I think, you know, Glenn, I think this was a great intro to what ALIS is all about. But I think we really need to kind of move this conversation to where we're going and what's happening.
So let me ask you, what was your feeling of the overall tenor of the event to start?
You know, great question. Because coming into this, I was like, what is going to be the tenor? Trying to, you know, guess it, so to speak. You know, last year we had cautious optimism. And you looked, I don't know if you saw, but being an attendee of ALIS, they sent out ahead of time all the statistics from CBRE, STAR, Calibri Labs, etc. And reviewing that, it sounded like everyone was heading towards moderate growth, you know, maybe no occupancy, and this is what they're predicting now, right? No occupancy growth, 2.5% RevPAR and rate growth for next year potentially, and no downturn until 2020. So again, I guess it's cautious optimism, but the words I'm hearing: wait, watch, and prepare.
Oh, interesting. Wait, watch, and prepare.
Correct. And then speaking with owners and developers and so forth, people that are putting capital on the street right now, renovations are still moving full forward. What I'm hearing is owners are saying, let's reinvest in our properties now. Let's get it done before there is a downturn. So we're at the top of the food chain, then the bottom of the food chain. So in general, I think everyone's still moving forward, which is a good sign, because we all know that the sign of a recession is when companies start to slow down their process, right? And inventories start to build up, and we're not replacing supplies, and then this company doesn't buy supplies to fill the inventory and so forth and so on, and before you know it, you're in a recession.
Right. I was about to say, you gave me a great example of that the other night.
I did. So, for example, if you're making widgets per se, and you make 3 widgets a month and you sell 3 widgets a month, and you also, when you sell those 3 widgets, you buy supplies to make 3 more. Then all of a sudden, next month you only sell 2, but you still buy the 3 months worth of supply, or the supply for 3, because you think you're going to catch up. Then the following month you make 2 again. Now you make a decision: do I continue to buy the 3-month supply or not, or the supply for 3 or not? And at some point in time, you stop and reduce your purchasing. Then it goes back to that supplier. That supplier is buying raw materials to make that. It takes them a couple of months till they slow down, and that's how a recession starts. And Glenn, do you know the difference between a recession and a depression?
No, tell me.
So Glenn, a recession is when your neighbor's out of work.
Right.
A depression is when you're out of work.
Yeah, for sure. And it's a depression both ways. You know, just super.
But in general, though, I don't think, you know, what I'm hearing, and I'm no economist myself, but what I'm hearing is everyone's forging forward, it seems.
Yep.
We're continuing to move forward. We're, again, cautiously being optimistic, kind of this wait and see. I don't think newer projects, things that have a 5-year horizon or a 3-year horizon, maybe those are slowing down. But I think things that are in the pipeline, people want to continue and get them done now.
Yeah, they really do. I like what you said in regards to people doing their renovations now so they don't get caught. I recall during the big Great Recession that we had, a lot of hotel owners didn't do that. And one of the Achilles heel of the industry was that a lot of properties weren't renovated, and they started to decline in quality. And because it was such a deeply felt recession, the major brands started to capitulate to the owner's needs, and they
lowered their standards
right,
as well.
You don't have to do these renovations. You can kick the can down the road. And I think that caused a lot of problems and made it difficult for people to catch up with rate as quick as they might have otherwise.
Very true. And also back in those days too, brands also owned real estate. And they kind of got caught up where they'd hold other owners accountable to standards, but maybe not themselves. But today, they're not as much heavily invested in real estate. But that being said, I agree. I think we've got to continue to spend capital dollars when we can, keep the properties renovated. It's going to be interesting if we do have a downturn, what happens to all these brands. Right now they're all fragmented to very, very thin pieces of the market, so to speak, very small demographics of who they're going after and so forth. And I'm not sure how that lasts in a deep downturn, if we have a deep downturn. I actually, it's interesting. When was the last time we really had a true cyclical downturn?
That I couldn't answer. I've been in the business 20 plus years, but every single time there's a downturn, people say this is different, this is unusual.
Right. I mean, the last one we had was a financial crisis meltdown with our commercial lending and so forth, right?
I remember being at the lodging conference when that happened, and it was a real out of body experience because nobody knew how to process it.
Right. And we thought the banks were going to fail and so forth and so on. And then if you go back 7 years before that, you had the bomb debacle, which threw us in a tailspin. So it's been a while, I think, since we've really had a true. Now, each one of those, though, we were starting to see slowing of the economy in each one of those times. So I think there was a natural coming, but I believe that some of these black swan events, or whatever you want to call them, such as the dot bombs, the dot-com debacle, as well as the banking crisis, kind of expedited the recovery process. Mm-hmm. It made the recession happen faster and deeper, and I think we came out kind of a little faster, it seemed.
I think one of the things that we don't do enough is separate the different parts of the industry, right? We kind of here, because we know everything, we kind of lump everything together: the real estate, the financial business, and then the operations side of the business. And I think, and you'll tell me if I'm wrong, I think the reason why the operation side of the business was able to make a strong recovery is because people stopped developing hotels entirely. So that drove up demand that might have artificially inflated your ability to raise rates even quicker than you would have if those new hotels had come to market.
There's lots of different things that transpired. I think, in the dot bomb debacle, the hotels, out of fear, did what they traditionally do and think that they can create demand by lowering prices.
Oh, yeah.
And I think we kind of learned that lesson a little bit and didn't do that as severely in the lending crisis.
You think that's interesting because I remember the race to the bottom. And the way that I looked at it was how mom and pop hotel owners are very different than a sophisticated management company owner. And they're almost held to the standards that the mom and pops put out there because they're panicking. They're just trying to feed their family. So I think they're liable to lower rates quicker, which complicates it for everyone else.
I don't disagree. But I think, as the mom and pops have become became more dependent upon OTAs and things of that nature, and having that technology was able to kind of simmer it a little bit because they had information they could communicate back to the mom and pops and be able to control price. And I think that's what will happen going forward. What's also interesting is what we're hearing, a lot of pressure on wages. We're seeing a lot of upward pressure on wages with the living wage, minimum wages going, from county to county or state to state or city to city from $8 to $12 to $15. I mean, that's kind of happening nationwide. We know what happened in New York just recently in the last 3 or 4 years of minimum wage. This year went up to $15 an hour. Started at, I think, 8 and worked over several increments over the several years. But that's happening everywhere. Working on an assignment right now where Tacoma, Washington's going to $12.
Right.
Seattle's going to 15. So we're seeing these minimum wages raise, putting pressure on payroll. What's interesting, as we mentioned just a minute ago, we expect 2.5% growth in RevPAR next year. However, though, wages and expenses are going to outpace that. So we're seeing NOI shrink.
Right.
So and I think going back to the 3 words I mentioned earlier was wait, watch, and prepare. That really keys on the prepare. You know, we need to look at how do we focus on reducing our expenses. We're not going to be able to lower pay rates, but can we become more productive?
Right, and that is an issue that I want to get a little bit further into, but I want to take a quick break, and we're going to be right back after this.
Hi, this is Gary Isenberg with LWHA Hospitality Advisors, president of their asset management division, where we bridge the gap between hotel ownership and management. View us at our website at www.lwhospitalityadvisors.com. You can always email me at gary.isenberg@lwhadvisors.com. Feel free to call me as well at 212-300-6684, extension 108. Look forward to speaking to you or receiving your emails.
So, Gary,
Yes.
I think that you're absolutely right. As expenses continue to rise, and it's not just with wages, it's with all the goods and services for the hotel, because we've had such good times. Everybody's pushing it up. It's making it a little
But
bit
it's
more
wages.
complicated.
And what I mean by wages, if the inventory clerk who's taking and putting the shampoo
Right.
from the manufacturer
Right.
plant onto the truck
I see what you're
made
saying.
$4 an hour and now is making $12 an hour, your prices are going up.
Right.
So it's affecting us across the board.
So what does this mean, Gary? And I spoke to a lot of people at this event, and I'm feeling that the next big thing is going to be workflow software, getting a better understanding of how your employees are being used throughout all times of day to make them more efficient.
You know, I agree wholeheartedly.
All right,
And
good. I
think-
was getting worried because I was seeing your face, and
No,
I was like, "Uh-oh, maybe I'm going wrong."
Well,
here.
I was going to go a different angle. We'll come back to my other angle later, but productivity is huge, and I think that's really, as an industry, where we can focus on. Just recently, I think about 2 weeks ago, there was an article in the paper in one of the trades about a robotic hotel somewhere over in Asia.
Yeah, the Hana Hotel,
Hana,
the
right.
one that you got greeted by dinosaurs and stuff.
Correct. Everything was robotic, and they fired half of the robots. because
hear that.
because the robots had bugs.
Right.
Not bed bugs, but bugs in their programming.
I thought maybe they unionized and are asking for a lot more.
And one of the instances they talk about, and I think we've all experienced this with Siri and Alexis in our house and all these different things, but this gentleman was in the room and he kept being woken up in the middle of the night with, "Can you say that again? I didn't understand you," because he
God.
was snoring. So yes, I think technology, and I think it's all happening, but we've got to be very cautious moving forward with technology and implementing in the hotels. It can't be for the sake of being vogue and cool and hip. It's got to be truly to solve problems. And I think the robotic hotel went about it to be cool and hip versus really to solve a working problem.
Right, and it also doesn't address the issue that in order to really connect with customers, you need that human contact. They're the ones that make a difference. I'm staying in a great hotel. You stay in nice hotels.
Well, I don't know.
But-
Well,
all right, maybe not on this one. It is really expensive here in downtown LA during ALIS time. But one thing I did notice is that all these hotels brands are pretty good at what they do, and hotel professionals are really good at what they do. So the product itself is terrific, and the only way to really connect with customers in a meaningful way, I think personally, is that human connection.
It's true, but if we look at, and some of the hotel unions might
Right.
not like to hear where I'm going with
Yeah.
this, and I'm not saying we eliminate jobs, but I think we refocus how things are being done. It's very difficult, and especially now with unemployment.
Right.
We have record low unemployment, and finding individuals to work in entry level positions is really difficult. You're paying $15 an hour as a minimum wage to get someone to clean rooms, that's a really tough job. You know, they can go over and maybe stack shelves for Amazon or something for $15 an hour, and it's not as grueling as cleaning rooms. So, so it's hard to find that personnel. And I think what we're going to see in the years to come is we're using technology and robotic to handle that process for us.
I agree.
Because that's not necessarily a guest interfacing experience.
Right. And I think that's the smart way to do it. When this whole robotic technology thing started to come out, and we saw that robot that delivers stuff to the rooms, and we saw all this guest-facing technology, I think you nailed it with the Hana Hotel, that's not really the smart way to go.
Correct. And I think also, you know, one of my favorite examples used with technology is the whole driverless car, right? And if we take that to the airport shuttle van for a hotel, I'm not saying that the airport shuttle van driver, the payroll dollars for that get eliminated. But what I am saying is that we have a driverless shuttle that shows up at the airport. He knows when you're arriving. He can track you by your frequent traveler ID because it's RFID or whatever, and he knows exactly where you are. The doors open up, and there's a concierge on the bus who welcomes you with a glass of champagne.
Oh, I love that.
You know, so you're not changing payroll, but you're changing how you service the customer. I think that's how we have to harness technology.
And I think that's a great way to look at it, too. That way, that'll give you the edge as even more hotels come to the market. But, Gary, what else were you experiencing and feeling and learning during the ALIS conference?
So, yeah, let's go back to where we project the year and things of that nature. And I think also what we're seeing, Glenn, you know, there's been upward pressure of late of interest rates as well. That's a concern, although, you know, the Feds have kind of toned it back a little bit in the last quarter. But obviously that's rising. We're seeing wages rise. We're going to see cash flows kind of decline with minimum growth of RevPAR. But all the fundamentals, the projections of occupancy, group pace, transient pace, all these different things, you know, GDP, everything is positive right now. But there's volatility. Look what happened to the stock market in December. You know, we had the swings back and forth huge. So I think my personal opinion, just knowing the geopolitical world we live in today and so forth, we're probably going to see a lot of volatility of really quick swings on many different things. And I think the three words of wait, watch, and prepare is really key advice. Don't overreact to quick swings.
I was just thinking that, yeah.
You know, so wait, watch it out, see what's going on, and prepare. And I think the key to preparing is really taking a deep dive of your operations and really understanding how you can better perform and better improve. And I think, you know, hotel owners and operators should, you know, go out and spend a few bucks and hire consultants and advisors like us.
Yeah. How are you feeling about the overall deal making that was occurring at this particular conference?
Everyone's looking for deals.
All the time.
All the time. And there's definitely, you know, there's not a lot of deals out there. There's things for sale, but there's not a lot of deals. And I think that also speaks to the caution a little bit. You know, things are getting a little heated in pricing. You know, cap rates have come down. You know, values are increasing. Interest rates are rising. So that balance of the investment to invest in a property and the cost of the capital are starting to come out of line a little bit.
Right. Do you feel one of the things that I learned at this event is we're at that point, and we'll just call it the cycle for convenience sake, that a lot of new entrants are coming into the hospitality business. I heard over and over again, high net worth individuals, folks coming in from other categories such as multifamily, or they own a lot of gas stations and convenience stores. But how does that affect stuff?
Yeah, but I think that's been happening for the last 3 or 4 years.
Okay.
You know, yeah, there's definitely more newbies, as we call them, entering the markets into the space, but it's been happening. And typically in the past, that's the sign of a downturn. You know, when you have someone that doesn't belong to be in our industry whatsoever and enters our industry,
right,
trouble's ahead.
Because they kind of screw up the fundamentals, not because they're not smart individuals, but they don't understand necessarily the nuances of how this business works.
A lot of times it's really they're just overpaying
okay.
the prices. I mean, really putting it very simple.
Yeah.
You are being polite, but that's kind of what happens, right?
Right. Yeah, okay. So, what else was a big thing? Any big news that you learned from the brands, for example, that were out there? I got a first look at Hilton's Motto. They built out a couple of rooms.
Yeah, what'd you think of them?
I thought that they were not designed for me, personally. On the pro side, I think they're onto an interesting concept. They're kind of dancing around the edges of, I think, where we're headed right now. It's still some personal space, real stripped-down amenities, but you can have up to 4 rooms connect with each other Some of those rooms have Murphy beds, so you can just toss them up and have a nice couch. And as one of the Hilton people said, you could pregame in that room. Then everybody could go out and do their thing in the city, and then come back and everyone has their own space.
Yeah, so they're moving towards the youth hostel kind of environment. You have bunk beds in rooms, and seems to be the trend right now. It'll be short-lived. I'm not sure that's a long-living trend.
I don't know. I tend to think that I'm looking at a lot of this stuff as a dude about to hit 50, right? I try to put in my head when I was in college how I would feel about it. And when Tropicana, for example, in Las Vegas, they introduced, Flamingo, not Tropicana, I apologize. They started to introduce these bunk bed rooms, and the kids seemed to love it. But not only that, I learned at the Moxie, New York, I was talking to the owner of that building. He said they put in some of these bunk bedrooms, and it winds up attracting families that the kids are into.
Right, which I understand, but
Yeah.
at the end of the day, the majority of our business in the United States is corporate travel.
I agree. It's
And
a
I'm not
niche
sure
category.
the balance how we so you can't build all your rooms right that way, but I think my fear is it's going to happen what happens with suites.
Right.
Where you're not going to get the rate premium. It ends up being a last room sold room on the nights that you have compression with business
Right.
travel, and it just becomes an inventory nightmare. If you look at it, hotels today, if we want suites, we stay in suite products.
Right.
We're not going to a hotel to buy suites. A lot of full-service hotels are minimizing the amounts of suites they build today because they're hard to sell. They end up being just upgrades more than actually something you sell. So I think we got to be cautious of that.
Well, interesting. I did a video interview with Andy Alexander, the president of Red Roof, and they were talking about buildings that they're doing that it could be hometown suites and regular Red Roof kind of a thing, and the room size is exactly the same. So theoretically, over time, you could change the mix depending on your market.
And I think also like a Red Roof Inn product to cater more towards that leisure market. That's who their consumer is.
Right.
But a full service Hilton per se, their bread and butter is the corporate
Right.
traveler. So I think we got to it's not going to be one size shoe fits all.
It never is, and you so were right on at the beginning of the conversation when you were talking about that major proliferation of the brands and the effect of it, and I think we're seeing that play out in a lot of these newer brands that are going for smaller and smaller slivers of the market, which you said.
Yeah, I heard that. I believe it's Hilton is potentially launching a brand that's going to fit between Canopy and and it's supposedly competing with AC, and I thought Canopy was competing with AC, but this is another sliver
Right.
above Canopy. I don't understand all the fragmentation, quite frankly.
Well, consumers, I don't think, care about the fragmentation. They don't see it in the same way as the hospitality industry does. And one of the things that's always struck me at the ALIS conference and others is they talk about having all of these brands that are in very specific swim lanes, right?
Right.
But the specific swim lanes are this room costs $4 more than this other brand that's in our family, right? And the customers aren't going to say, oh, for $4 more, I'm going to get an upgraded clock radio or whatever it is. They're just going to look at the price.
Yeah, to some degree. I think, it's an opportunity to compete. I mean, that's really what it is for the brands, right? We've got a Hilton Garden Inn, we've got a Hampton Inn, and we've got a Homewood all in this block, and there's still great demand. So let's keep someone from building a Marriott product and come up with another Hilton brand.
Right. Yeah.
I mean, let's be honest, that's kind of what it is.
Yeah, that's exactly right. So, any final thoughts that you have on what just transpired, other than you probably need a nap?
I do need a nap. Jet lag, flying home tomorrow is going to be a pain in the neck
Yep.
as well. But I got my Parker and my gloves and my thick socks. But seriously, I think it's going to be an interesting year in the whole geopolitical. What's going on geopolitically as well as the economy.
Mm-hmm.
But again, I think it's watch. I think those were great words, and prepare. And the key about preparedness is we offer a great product for owners to do a deep dive of their operation and identify low-hanging fruit and ways that they can improve. And I think where they hire a company like us, where they hire someone else, it's a great time to start identifying those opportunities before there's a downturn.
You had mentioned the suites product. One of the big issues that I see right now, things that people are really rallying around, is the whole idea of the extended stay hotels. They're a huge portion of the new construction pipeline right now. They seem to be working well for owners and guests because you could lower the number of full-time employees you have. Guests seem to like the flexibility of the space, and it seems like the whole industry's woken up to, it's easier to get a guest for one guest for 30 days than 30 guests for 1 day each.
But that's all, geographically
Right.
somewhat defined, right? I mean, extended stay hotels that are being opened in Manhattan, for example, aren't really extended stay hotels, right? They're just offering a better room product and competing. So it really depends on the market, but that's been there. Let's face it, extended stay has been around for a long time in that true 30-day stay, especially in products such as like an extended stay America and things of that nature. Excellent.
So final wrap up here is just be calm, be thoughtful, and don't go nuts.
Exactly. I couldn't say it better, Glenn.
Right. Excellent. So, Gary, how can we find you?
You can find me at LWHospitalityAdvisors.com. That's Gary.Isenberg at LWHospitalityAdvisors.com. You can also reach me by telephone, 201. I'll give you, my cell phone, 201-424-2495. Give me a call.
I love it. I love that you're so out there doing the cell phone thing.
Yeah, why not?
Yeah, I like it.
You don't pay for minutes anymore, so who cares?
I know. The one thing that annoys me now is it seems like all the spamming calls have discovered my cell phone number.
Well, it's funny, it's just funny you say that because my area code is 201, and that goes back 30 years ago when I lived in New Jersey. And so I get those spam calls with a 201 area code. I know no one with a 201 area code with a cell phone. So therefore I know, ignore.
Yeah, they're doing all these spoofing things. Mine's a 917 number. I get tons of those calls. I just ignored. I actually ignored someone accidentally that I should have spoken to and then had to say, sorry, I get so many.
Did you get the business?
I don't know. I don't remember what the call was about. It might have been them just yelling at me about something randomly. I don't really know.
It wasn't me, I promise.
All right. We're going to save that for as soon as we stop the mics. Gary, this is a great show. I really enjoyed talking to you today.
Me too, Glenn. We'll talk soon.
Yeah, and thank you all for listening. And we'll be back next month with another great episode of the Business of Hotels podcast. Thanks for listening.